Now that you know why investing is important, the next question is, where should you invest, and what kind of returns can you expect? It's essential to choose an investment type that matches your comfort level with risk and your goals for returns. Some people are willing to take big risks with their money, while others prefer to play it safe. What are the best investment opportunities? Fixed income instruments. Fixed income instruments are investment options where your initial money, the amount you put in, is considered safe. The entity you invest with pays you interest on your principal amount. The simplest example is a bank's fixed deposit. Interest can be paid quarterly, semi-annually, or annually, and your capital is returned at the end of the investment period, called the maturity period. Examples include bank fixed deposits, government bonds, bonds from government agencies, corporate bonds. From 2022, returns from fixed income instruments like bank FDs range from 5–6% and government bonds offer about 5.5%, while some corporate bonds can offer nearly 9–10%. The rates vary because the risk varies. Government bonds are very safe, while corporate bonds can be riskier and potentially lose value. Equity. Investing in equities means buying shares of companies listed on stock exchanges. In India we have Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. Unlike fixed income instruments, there's no guarantee you'll get your initial investment back, but the potential returns can be much higher. Here equities have generated almost 12% annual growth. Investing in well-run companies can sometimes yield over 20% annual growth in the long term, but finding these opportunities requires skill and patience. Real estate investment involves buying and selling properties like land, apartments, and commercial buildings. You can earn money through rental income and the increase in property value. Rental yields are typically between 2–3%, which is relatively low. The appreciation in property prices can vary greatly depending on the location. Real estate transactions can be complex, involving legal checks and usually require a large amount of money. Measuring returns from real estate can be difficult due to the lack of standardized metrics. Commodities. Gold and silver are popular investment options. Over the long term, these metals have appreciated, with annual returns of approximately 5–8%. You can invest in gold and silver through jewelry, exchange-traded funds, ETFs, or sovereign gold bonds, SGBs. From the previous data, equities often offer the best returns, especially if you invest for a long time. Cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Unlike traditional currencies, they are typically decentralized and operate on technology called blockchain. Cryptocurrencies have shown the potential for substantial returns. For example, Bitcoin's value increased exponentially over the past decade. Cryptocurrencies currently lack these safeguards, so it's best to avoid them until there's a solid regulatory framework. By understanding these investment types and their characteristics, you can make better decisions and build a portfolio that suits your risk level and financial goals. Invest smart, grow wealthy. Follow Money Moves for more tips and tricks to master your financial journey. Thanks for watching.